Hey everyone, on Saturday we had the quarterly result of ICICI Bank and it was a stellar performance from the bank. Year on year, ICICI Bank profits have jumped 49.6%, which is brilliant for a large cap company like ICICI Bank. Now I recently created a video on banking sector with title Why Every Mutual Fund Manager is Buying These Two Stocks. And in that video, I explained why everyone is bullish on banking sector. And even I am personally bullish on banking sector. And out of two stocks, one stock that was part of top 3 stock holding in 10 out of 10 large cap mutual fund was ICICI Bank. If you haven't watched that video, then do check it out. So I thought it is worth discussing the results because when it comes to reading bank result, it is not an easy task. It involves various KPIs specific to banking sector, including your net interest income, advances, deposits, CASA ratio, non-performing assets, that is NPA, and so on. On top of that, ICICI Bank also has various subsidiaries including ICICI Prudential Life Insurance, ICICI Security, ICICI Lombard, ICICI Home Finance, etc. So in this video, I have tried to decode ICICI Bank quarterly performance for both standalone and consolidated basis and help you understand its performance across key parameters. By the way, in my previous video on IEX, I received over 800 requests to create videos on multiple stocks and financial topics. Unfortunately, it is not possible for me to cover every request. So I'm trying to pick topics with maximum common request. Now there are a couple of stocks reviews that were requested by multiple people. First is Tanla Platform and second is IDFC First Bank. So today we have results of Tanla Platform. I'll keep an eye and share my analysis post result. And once HDFC Bank results are declared, I'll make a video on it. So if you have any video requests, then please comment and I'll pick the most popular request. And before we move on to ICICI Bank quarterly result, it's time for quiz. I've recently started this new initiative on quiz where I give hint about the stock and you have to guess the stock name. Alright, so for today's quiz, here is the hint. This company is from IT and software segment, but it is not like any other IT company. It's a premium engineering service provider worldwide and amongst the leader in automotive, media, broadcast, communication and healthcare industry. It is working on some exciting technologies around electric vehicle, infotainment system and advanced healthcare machine. In last 5 years, its share price has grown nearly 10 times. Can you guess the name of the company? Well, put it in the comments. I'll share the stock name at the end of the video. Alright, now let's start the ICICI quarterly result analysis. Before we get into the numbers for Q1, I want to help you understand the business model of bank in a simple layman language. So banks are the backbone of the economy. Almost all wide transactions happens via bank. In simple language, banks act as an intermediary to transfer money from one person to another or one company to another. They also help you invest in various fixed income products like FD, RD, etc. or simply keep money in saving or current account. Now when you deposit your money with banks, either in saving or current account or in FD or RD, banks give you a certain interest. For example, in saving account, the interest is around 3% with top tier bank, then current accounts have 0% interest, FD gives you interest in the range of 5 to 6%. So people like you and me keep our money in banks and then banks passes on this money and lend it to people and corporates at higher interest rate. For example, they offer home loan which is in the range of 8 to 9%, education loan which is in the range of 9 to 12%, then you have car loan, personal loan, business loan and so on. So that's essentially how banks work. They borrow money from one set of people who have surplus money at lower interest rate and lend it to another set of people who are in need of money at higher interest rate. In this process, they keep their margin. Now for banks, higher this margin, higher would be the profits. This margin is also known as net interest margin. And the income that banks generate in this process is called net interest income. So banks want to increase this net interest income as much as possible. And for that, they would need more and more people to deposit money and more people to borrow money. And that's why it's very important to track the growth in net interest income, growth in deposit and lending growth of banks, which is also known as growth in advances or growth in credit. In this process, they also face the risk of default on their loan because not everyone end up paying the interest along with principal amount on the loan. Some people and corporates default on their payments. So that's one big risk with every bank. And one of the key parameters to shortlist a bank before investing your money. It's called NPA, that is non-performing assets that measure the asset quality of the bank. If this NPA increases, it reduces the profitability of the bank. And if this NPA reduces, it increases the profitability of bank. So bank's profitability depend upon two key factors. First is core operating profit, which include net interest income. Then there are other non-interest income like fee, dividend, etc. Then second factor for profitability is net provision. So your profits for your tax is calculated as core operating profit minus provision. Although there are other incomes like treasury income that is also added to operating profit. Now the reason why ICICI Bank has given stellar profit growth of 49.6% on year-on-year basis is because its core operating profit has grown and second, its provisions have fallen. I hope it makes sense. Now with this, let us look at the Q1 numbers for ICICI Bank. To begin with, let us first try to understand the various subsidiaries of ICICI Bank. So it has got 51.37% holding in ICICI Prudential Life Insurance, then 51.88% holding in ICICI Lombard, 75% holding in ICICI Security, 51% holding in ICICI Prudential Asset Management, 100% holding in ICICI Home Finance, 100% holding in ICICI Security Primary Dealership Limited, 100% holding in ICICI Venture, then 100% holding in ICICI UK. So it has got its branches in UK as well, and 100% holding in ICICI Bank Canada. So there are various subsidiaries of ICICI Bank. So first we'll look at the standalone numbers of ICICI Bank and then we'll look at the consolidated result. Now within standalone, let's first try to analyze the P&L statement. First important parameter is your net interest income. Now if you look at the Q1 of 2023, its net interest income stood at 132.1 billion rupee, which means 13,210 crore rupees. Now quarter on quarter, it has grown by 20.8%. It is very important to understand, you should not compare it with last quarter. You should compare the Q1 of this year with Q1 of last year. So last year it was 109.36 billion rupee in Q1. So it has grown by 20.8%, which is pretty good. Then you also have some other non-interest income that stood at 46.29 billion rupee, that has grown by 24.9%. So it basically includes your fee income, dividend income, etc. So total core operating income of the bank has stood at 178.39 billion rupee, or in other words 17,839 crore rupee. That has grown by 21.8%. Next, you obviously have some operating expenses that include your employee expense and all of that. So if you subtract that, the core operating profit of the bank stood at 102.73 billion rupee, which has grown by 19.4%. And if you exclude the dividend income, their core operating profit has grown to 99.26 billion rupee, which is 9,926 crore rupee. That has grown by 21.1%. So this is the P&L breakup. If you further extend it, you can see there are some other income called treasury income. So you have to add it. So you get the total profit. Now you have to subtract the net provision. That is basically your NPAs. Now this is very important. If you look at it, the net provision in Q1 of 2022 stood at 28.52 billion rupee, whereas this year they stood at 11.44 billion rupees. So there is a fall of 59.9% in the total provision, which means there's an improvement in the asset quality of the bank, and due to that, the profit after tax was last year 60.43 billion rupee and now it is 91.65 billion rupee, which is 51.7% up. And if you look at the final profit after tax, it was 46.16 billion, which has now grown to 69.05 billion, and that signifies 49.6% growth in the profit after tax. So I hope it makes sense, because bank's core income has also grown, its provisions have fallen, the net profit, the total profit has increased significantly. Now let us look at the key ratios. So first ratio is your net interest margin, which is the difference between the interest it charges from its borrowers minus the interest it has to pay to its depositor. So for Q1 of 2023, the net interest margin stood at 4.01. And the same quarter last year was 3.89. So the net interest margin has increased from 3.89% to 4.01% quarter on quarter. Then if you look at the cost of deposit, which is basically the interest it has to pay on your FD, RD, saving account, current account. So cost of deposit is 3.46%, and the cost to income. So out of 100 rupee generating as an income, what is the money it has to pay as an expense? So that stood at 42.3 rupee. Apart from this, one of the important parameter is return on equity. That stood at 15.9% for current quarter, and it was 12.3% Q1 of last quarter. So that has also grown quite a lot. So that's about the key ratios from P&L. Now let us look at the deposits of the bank. If you look at the CASA ratio, it has grown by 15.8%. Within that, current account have grown by 18.4% and saving account have grown by 14.7% year on year. And if you look at the term deposit, it has grown by 11.4%. That include your FD, RD, etc. So your total deposits have grown by 13.4%. And your average CASA ratio stood at 45.8% against 43.7% of Q1. So your CASA ratio is important because your current account and saving account, banks have to pay very low interest. And if you have high CASA ratio, it means banks will have high net interest margin. So that's about the deposits. Now important aspect is how is the credit growth, that is the loan growth. So here is the breakup. If you see, the total advances stood at 8,956 billion rupee, which has grown by 21.3% year on year. And if you look at the breakup, the retail business has grown by 24.4%. By the way, retail constitute the highest portion of the total loan book, that is 53.1%. Then rural loans have grown by 8.4%, that constitute 8.6%. Business banking has grown by 44.7%, that constitutes 6.4%. Then SMEs have grown by 32.3%. Domestic corporates and others have grown by 14.4%, that constitute 22.4% of total loan book. So overall, if you see, the total domestic book has grown by 21.7%, that constitute nearly 95% of loan book, and it also has its foreign branches. So overseas business have grown by 14.1%, that constitute 5.1% of its loan book. Net, if you see, the advances have grown by 21.3%, which is pretty good. And if you look at the breakup of retail portfolio, as in where it is giving loan to retail people, if you see, mortgage business has the highest contribution by 63.8%, basically means the home loan, the loan against property and all of that. So that has grown by 22.3%. Then your vehicle loan has grown by 12.4%. Within that, auto finance have grown 17.6, commercial vehicle have grown by 3.7, and two-wheeler loans have grown 36.5. So it clearly suggests that there is a high demand for two-wheeler loans. Then personal loans have grown by 38.2%. They constitute 14.3% of its total breakup of retail portfolio. Then credit cards have grown by 63.3%, that constitute 5.9% of its retail portfolio. Then some others, and overall if you see, its total retail loan book, that has grown by 24.4%. So that's a pretty impressive growth in its retail portfolio. Next, if you look at the NPA trend, its net NPA ratio stood at 0.7%, and last quarter it was 0.76, and Q1 of last year it was 1.16. So clearly there is a trend that the NPAs are decreasing, which means the asset quality is improving. Now, finally, let us look at the profit after tax of its key subsidiaries and associate. So ICICI Bank has generated a profit after tax of 1.56 billion rupee, which is 156 crore from your ICICI Prudential Life Insurance, 349 crore from ICICI Lombard General Insurance, 305 crore from ICICI Prudential Asset Management, then 2.74 billion rupee from ICICI Security, 0.2 from ICICI Security Primary Dealership, 0.4 from Home Finance, then 3.4 from ICICI Bank UK Division, and 7.2 from ICICI Bank Canada. Now, if we just summarize the overall result on standalone profit basis, ICICI profit stood at 6,905 crore, that is up 49.6% year on year. And on consolidated profit basis, if you see, profit stood at 7,385 crore, that is up 55% on year basis. So clearly it suggests there is a significant growth in the profitability of the bank. Now let us look at the share price movement. So if you look at the share price movement of ICICI Bank, it is currently trading at levels of 800. And in last 1 month, if you see, it has generated nearly 12% return. In fact, it touched the low of 700, and in last 1 month, it is already up nearly 14%. And if you look at the 6-month movement, it touched a low of 678 recently in June, and since then it is up nearly 18%. Now, even at current levels, if you see, it is currently trading at a P ratio of 20.1. And considering the bright future growth prospect at current P levels, ICICI Bank is looking very, very attractive. And that is reflected even in the shareholding pattern. So if you look at the DII buying pattern, since your June 2021, DIIs are consistently adding ICICI Bank. It was 41.7%, then increased to 42.49, then 43.75, then 44.53, and then 45.33. Consistently on every quarter, DIIs are buying ICICI Bank. Of course, FIs are selling because of this global sell-off, But since DIs are buying, it shows the confidence of domestic institutional investors. Now, even if you look at the target price, again, you should not buy based on these targets, but that gives you a pretty good understanding. So if you look at JM Financial's target price, this is, by the way, the latest today's data. They've given a target price of 1,000 rupee. Then there was a target from Axis Security in July. That was again 1,000 rupee. Then Motilal Oswal has given a target of 1,050 rupee in its April 23 report. And recently I saw, this is again today's data, there was a news where it says foreign brokerage are bullish on ICICI Bank after Q1 earnings see up to 30% upside. So clearly from all the brokerage houses, all the analysts, everyone is bullish on this stock, and because it is growing at a very good rate, there are future growth prospects, and overall there are nearly 30-40% upside potential. Having said this, it can happen that because of this global sell-off, there could be a correction in ICICI Bank share price, and if that happens, again it will only create buying opportunity. So in this video, we discussed the quarterly result of ICICI Bank that has posted stellar result in Q1 of FY23. Year on year, its net profits have jumped 49.6% on standalone basis and 55% on consolidated basis. And considering the fact that there's a good amount of credit growth expected in banking sector, ICICI Bank is well positioned to capture this credit growth. Moreover, due to improvement in asset quality, the bank's profit have jumped significantly. And every analyst and brokerage house is bullish on ICICI Bank. And it is also one of my favorite in large cap category. Although the share price has already jumped nearly 15% in last 1 month, there is more growth potential. So it is a good buy even at current levels. And if there is any correction in ICICI Bank share price due to global sell-off, it will only create a buy opportunity to accumulate ICICI Bank in a systematic manner. But again, these are my personal views and it is not a stock tip. The content is only for educational purpose so that you can make an informed investment decision. Now it's time for the quiz. The question was, this company is from IT and software segment, but not like any other random IT company. It's a premium engineering service provider worldwide and among the leader in automotive, media, broadcast communication and healthcare industry. It is working on some exciting technologies around electric vehicle, infotainment system and advanced healthcare machine. In last 5 years, its share price has grown nearly 10 times. The answer is Tata Elxsi. Established in 1989, Tata Elxsi is one of the leading player in EV space and media and healthcare and growing at a rapid rate. In last 5 years, its profits have zoomed from 175 crore to 625 crore, signifying 26% CAGR growth. It has excellent profitability with 3-year average ROE of 31.6% and 3-year average ROCE of 41.8%. Company has negligible debt to equity of 0.09. I created a video on Tata Elxsi last year where I explained its business in detail. Currently, it is at levels of 8,500 with a P ratio of around 85. Although the valuations are expensive, but the way Tata Elxsi is growing, it will command a premium. Tata Elxsi has a market cap of somewhere around 52,000 crore and has the potential to generate multi-bagger returns even from current levels. Again, a great stock to add in systematic manner. So this is it from my side. If you find the video useful, do like it and share it with your friends. I'll see you in the next video. Till then, take care.